Hello everyone, what's going on? Uh, Today I'm excited to share with you my favorite trading strategy. Now, it's my favorite because it's so simple. This strategy is so simple that it helped me get my first payout after only 3 months of trading, and it's gotten me, since then, for a little proof here, now don't laugh, my last 6 out of 7 weeks have been green. Trading this one strategy. Now where this shines is the strategy itself is so simple that it lets you put your mental energy into perfecting risk management, which is, we all know it's so important, but you don't realize it. Typically the 15-minute orb is traded on NQ. That's what I like to do because it's so volatile and you'll get those big moves that you're looking for. But I've seen some people do it on gold, ES, and some other stocks, but what I like is NQ. So what I do every morning is I mark out the 15-minute high and low of the first 15 minutes of market open. After I've done that, I'll go and I'll put in the midline, which I do with my fib here. This is not as important. This is just like a little nuance that you can use when you've gotten experience at the normal orb. So once that 15-minute high and low is marked out, I like going to the 5. You can play around with the 3, 2, or 1. And you wait for a breakout. So in this instance, the breakout would be this candle right here. Now, there are some people who like to enter immediately upon the breakout, which I used to do that, but it's really market condition dependent. So there is some people that will buy upon the breakout, but what's giving me a more steady win rate has been waiting for that retest. So what you'll know now on this breakout candle, making it valid, we have the ascending volume, which is good, and we left behind a fair value gap right here. Now this is a 5-minute fair value gap, but sometimes if you want better entries, I drop down to the 2 most often, and I get my entries right there on the 2. So we have this wick, we show strong rejection. If I wasn't lucky enough to get my entry there, I would have waited till right here. Now, assuming you got your entry around here, I tend to play my stops above this fair value gap right here, but you can also play it at this level of resistance, the orb line that we've just created. Depending on how much you risk, what the circumstances are, like if this gap was shifted further down, so almost like this one, I would have played it here because there's no need to have my stops all the way up there. What I targeted initially on this trade was this low because I would like to see low a day. What you do with orb is you do not take out 100% of your position at TP1 right here. You do not want to do that because sometimes what will happen is it will dictate the trend for the day and we will just run forever. Now, I don't know what we swept here, maybe a weekly low, a 1-hour low, an unfilled 4, 8 London low. I have no idea what this could have been, but we went there and that was the draw. So once you get rid of that first draw we made right there, or sweep it out, and now you have 20% of your position left in, you go break even, and you catch that move to the next draw. Very crucial. Some sauce here is generally on Mondays, Tuesdays, and even Wednesdays, we won't actually continue like that, just what I've noticed personally from gathering data. On Fridays and Thursdays especially, we'll just run. We'll go straight in this instance down to whatever we're hunting out for that day. So what I'll do is on days like Thursdays and Fridays, I'll take out maybe 65% of my position at that TP1, and then I'll let the rest run. And then Mondays, Tuesdays, and maybe Wednesdays, I will take out 80-90% right there and leave like 1 or 2 cons all down to whatever draw I've selected for that day. If you don't know what a draw on liquidity is, that's a whole separate video. It doesn't really matter that much with orb because what I targeted was this low right here. Some more sauce. If you're, how do I explain this? If where you want to see price trade into is not at least a 2RR, don't take it. Don't, just sit it out. Let's say this low was right here. So we went and then we retest like that. That is not, that is way too much risk for the reward I'm getting. So let's say if the draw I wanted to take out was up here, I would have waited for a retrace where I get more of a discount. So somewhere around here, this fair value gap we made in the first 15 minutes of market open. That's very important. Sometimes you can get away with it if you have extremely strong conviction that we are going to continue in that direction. But you're not the market makers. You don't know as much as you think you know. And you should probably play it safe. Because remember, the market is infinite, but your capital is finite. So this is this Monday, and here's some sauce on how to avoid fake breakouts. Before we broke out, we had no candle closures. Like, look, just, please guys, use your brain. If you see this, what does that tell you? It's an area of high resistance, okay? And then you guys see this huge ass dick candle right here. And look at the volume. Look at this volume compared to these two. This green candle. You know what that means? That means that move is probably not going to sustain itself. And look, it didn't. Let's look at this here. Technically, yes, that's a breakout. And then just look at this volume candle right here. So I would love, and we left a fair value gap behind too. So we come down, and now I'm personally looking for an entry in this area, this fair value gap we made that volume also confirms with. So we go here. Probably, I mean, there's definitely a 2-minute inside of this, so you look for that. You're not going to top tick. Let's be real, so let's go here. And stops, maybe, you don't have to play them that high. You could, assuming it's around here, 13, 15 points, I like that. And you would target your 2RR, which is not even close to the low we made. So this trade is a trade I would take every day, all day, because look at it. First of all, we have volume confirmation. Second of all, we failed to break out to the upside. Third of all, we see these 2 wicks, meaning we're not gonna, like, there's a chance you even entered here. Like, I probably would have, just because it's so convincing. And look at this low we have ready to take out. So that's a 4.3R. Now I've actually, you know what, for the sake of being safe, I probably would have, and the RR is already so good, I would have sized down and played my stops wider up here. And look, we took them out. Now the move didn't sustain, but if 58 points isn't enough for you guys, I don't know what is. Anyways, if I missed anything you guys would like me to cover, just comment. But that is how I trade the 15-minute orb. It's really simple in my opinion. I'm sure I'm not the great at articulating exactly what I do every step because a lot of it is discretionary. So if you have any comments, feel free to let me know. If you enjoyed the video, give it a thumbs up. Subscribe.